For those of us who check in on the market every day, it's sometimes worth taking a step back on a Friday at the end of the week's a good time to remind ourselves of where we're sitting in the global economic cycle. Because last night, US shares rose again on the back of what's being termed benign inflation data, and we saw more all-time highs in US stocks, and it's very likely that we'll see a strong upward impulse in stocks across the Asia-Pacific region today, which will take markets here back towards their all-time highs. It's an extraordinary time in the markets, historic. The Dow Jones Industrial Average traded above 46,000 last night for the first time in history. And it came on what I would argue were fairly tepid numbers. In other words, the sentiment is wildly positive at the moment, and upward momentum is very strong. And any numbers that they can, that investors can grab onto to justify those sorts of moves are having a market impact. So last night we saw the monthly inflation data in the US, and it showed at the core level that inflation was steady at 3.1%, and at the headline level had ticked up from 2.7% to 2.9%. Now, those numbers are broadly in line with expectations, but that's as good as it gets for the doves in the market, because this inflation data is showing a turnaround. It's gone, inflation in the US has gone from trending downward to trending upward. And that is a concern for the actions of central banks. Now, at the moment, the market has entirely shrugged this off and said there will definitely be a rate cut come the September 17 meeting next week, and that we will see another 2 rate cuts before the end of the year. That is a mighty assumption given the turn up that we've seen in inflation overnight. But I'm just one voice out here in the wilderness. The reality is the momentum is unstoppable at this stage, or it appears that way at least. And futures indicating that we're off to a good start here in Australian trading with a 0.5% gain and a similar sort of gain in Hong Kong. So it looks like it'll be a good trading day again. And who am I to complain about the unreality of the situation at the moment? US auto stocks featured overnight, up 4.4%, recovering their year losses. Now, of course, the auto sector in the US in particular and globally has been under a lot of pressure. The supply chains in US auto manufacturing run through Mexico and Canada, and the threats of tariffs really rattled investor nerves in the auto manufacturing sector. Add into that increased international competition in electric vehicles, particularly out of China. The outlook for US automakers has been grim for most of the year. And so share prices are much reduced, and the gains that we're seeing in US automakers at the moment could well reflect some bargain hunting from those who are looking at slightly improved prospects. We did see sales data out of the US that showed record prices for new car sales, and that EV sales volumes had also hit new highs. And that is a real positive for the industry, given the negative news that's flowed through the sector. Last night, Stellantis was up 9%. Lucid is up 23% in 5 days, admittedly coming from a low base, but nonetheless an impressive upward move. General Motors is trading at 3-year highs, and Ford is up 26% year to date. So clearly a recovery in prices there, and one of the few sections of the US market where it might be argued valuations are attractive rather than stretched. However, the longer-term threats remain. The huge increase in production from BYD, Build Your Dreams, to be the biggest EV manufacturer in the world, is a trend that's continuing and is likely to continue to put pressure on US manufacturers. So while we are seeing a good rally in US automaking stocks at the moment, whether or not it's sustainable remains a very open question. Looking at our 3 stocks this morning, Tesla on the radar because of that focus on auto manufacturers. It's up 6% last night, or 14% over the month, and very high trading volumes. And there could be a view here that as it breaks through that $360 a share level, it is turned to a positive technical picture. That takes us past the highs struck at the end of May this year and has been an important price point for Tesla shares. So that move back over 360, combined with the uptrend that's evident on the daily chart, suggests that there might be further gains for Tesla, at least in the short term. There is talk it'll regain the May high. That's a fairly optimistic outlook, but it's based on the Model YL selling well in China, taking BYD on their home turf. However, the big recovery in their share price has some analysts arguing that earnings don't really matter when it comes to these stocks. They're trading on sentiment. The big sell down we saw in April related to Mr. Musk's political involvements rather than the concerns too much about the company itself. But nonetheless, sentiment is driving a lot of the market action at the moment, and seems to be the case in Tesla as well. In M&A news, Paramount is up 16% in overnight trading after it put a all-cash bid on the table for Warner Brothers. Now, this is unusual. Generally speaking, takeover bidders get sold down while takeover targets get bid up. But in this case, Paramount was up 16%, but Warner Brothers was up 25%. And if that's not a sign of a frothy market, I don't know what is. The stock, Paramount stock, is already up 70% in the past month. Apparently, it was nominated as a meme stock, and that sort of gyrate through a 40% trading range on the day that call was made, once again illustrating the power of sentiment in under current market conditions. The cash bid for Warner Brothers, double the market cap of Paramount at the moment, so a big stretch, but market action suggesting investors believe a deal can be done here. Turning to local stocks, CSL has been in focus amongst local investors, widely considered for the first 20 years of this century the best performing and most efficient Australian stock listed on the market, certainly one of the most successful in terms of share price rises. It fell a further 2.5% yesterday and is down 24% in the past 19 days. Now, this clearly relates to concerns about the weaker than expected earnings that was reported for the half year, and also the fact that the executive team at CSL have put out a very conservative outlook for the coming second half, or this half. However, the share price reaction has been quite severe, that big fall. Now, most analysts have retained buy ratings on the stock. The underlying business remains sound, and perhaps CSL is a victim of its own previous success in that investors have got used to high double-digit growth, 10, 20% growth. So this is a curious one. I still believe CSL is a very high-quality company. At the moment, the chart's showing very clear downward momentum, but there's little doubt that with the demerger, 3,000 job cuts still to come, and a buyback in play, that many large investors are watching CSL very closely at the moment.